Hello students, welcome to Accounting Explained at AccountWise Academy. This is Latha Venkateshwaran. Dear students, let us learn about the change in the method of depreciation. Sometimes the method of depreciation is changed either from straight line to diminishing balance or from diminishing balance to straight line. Either way we can change it. Diminishing balance means WDV or return down value method of depreciation. If you want to see my videos on depreciation, you can look into it in the description box. I will be sharing the link in the description box. If the change is from a particular year, simply change the method of depreciation from that point forward. That is called the prospective effect. Now I am going to explain this with an example. Suppose on 1/4/2020 you have bought a machinery for 1 lakh and you are going to charge depreciation at the rate of 10% under straight line method of depreciation. On 31/3/2021, that is 1 year later, when you close the books, the depreciation will be 1 lakh into 10%, that is 10,000. Book value will be 1 lakh minus 10,000, 90,000. That will be taken as the book value on 1/4/2021. 1 year later, on 31/3/2022, depreciation will be 10,000. Since you are following straight line method of depreciation, your uniform depreciation of rupees 10,000 will be charged every year till the life of the asset, right? So now the book value becomes 90,000 minus 10,000, that is 80,000. This 80,000 will be carried forward to the next year, that is the 1/4/2022, 1st April 2022. And on 1st April, you have decided to change the method of depreciation from straight line to WDV method, and you are going to charge depreciation at the rate of 10%. Now you have to see this point. If the change is from a particular year, simply change the method of depreciation from that point forward. So the change is from 2022, 1st April 2022. So you are simply changing the method of depreciation to WDV and you are going to charge depreciation 80,000 into 10% on 31/3/23. It will be 8,000. Depreciation will be 8,000. Okay. From 1st April 2022, you are going to follow the WDV method of depreciation. Okay, till the life of the asset. This is called the prospective effect of change in the method of depreciation. Just now we saw prospective effect. There is another method called retrospective effect. Under this method, first recalculate the value of the asset from its beginning date using both the existing and the new methods. Okay, we calculated depreciation under the existing method, that is SLM method, from 1/4/2020 to 31/3/2022, right? So the depreciation amount was 20,000 and the book value as on 31/3/2022 is 80,000. Again, even for WDV method, we are going to calculate depreciation for this period. So WDV method, the value is 1 lakh and we take the same rate of depreciation, 10% for WDV method also. Okay. So as on 31/3/2021, the book value of the machinery as on under WDV method will be 1 lakh into 10% is 10,000, 90,000 is the book value. As on 31/3/2022, we are going to calculate depreciation on 90,000. Okay, that is the book value. Since we are following WDV method, 90,000 into 10% is 9,000. So depreciation is 9,000. Book value is 90,000 less 9,000 is 81,000. Okay, so this is the depreciation amount under these two methods. Paragraph 15 of Accounting Standard 6 tells about the retrospective effect of change in depreciation. Okay, when the method of depreciation is changed, depreciation is calculated using the new method from the date the asset first came into use. So in the example, what did we do? We calculated WDV right from the date of the purchase of the machinery. Okay, the difference in depreciation calculated under the two methods is then adjusted in the current year's asset account by debiting or crediting to the profit and loss account. So under SLM method, depreciation was charged for 20,000 rupees for 2 years. Under WDV method, first year was 10,000, second year was 9,000, right? So 19,000 was charged. So now we are charging lesser depreciation under WDV method. So 1,000 rupees is profit to us. It will be taken to the credit side of the P&L account as profit in the change in the method of depreciation. Okay. In this video, we are going to see only the prospective method of depreciation. If a company decides to change its depreciation method from straight line to the declining balance method for an asset with a prospective application, the depreciation for the current and the future periods will be calculated using the declining balance method. The depreciation for the past periods when the straight line method was used would not be adjusted. So in the example, what did we see? Under straight line method, book value of the machinery as on 1st April 2022 was 80,000. Okay. So the previous period depreciation for the past periods would not be adjusted. So we take directly that as the book value. And see here, the depreciation for the current and the future periods would be calculated using the declining balance method. From 1/4/2022, we are going to charge depreciation on 80,000, that is the book value, using the declining balance method or the WDV method. Okay. Dear students, now let us solve an exam question for the prospective method of depreciation, where SLM method of depreciation is changed to WDV method. Okay. Ashok Limited purchased on 1st January 2019 second-hand plant for rupees 30,000 and immediately spent 20,000 in overhauling it. So, for taking the cost of the plant to our ledger account, we have to take 30,000 plus 20,000, that is 50,000. Okay. On 1st July 2019, additional machinery was purchased for rupees 25,000. On 1st July 2021, the plant purchased on 1st January 2019 became obsolete and was sold for rupees 10,000. On that date, new machinery was purchased at a cost of rupees 60,000. Depreciation was provided for annually on 31st December at 10% per annum on the original cost of the asset. Original cost means straight line method. This we have already seen. In 2022, however, the company changed this method of providing for depreciation and adopted the method of writing off 15% on the diminishing value. So, in 2022, the company is changing from straight line method to WDV method of depreciation. Here we are required to show plant and machinery account as it would appear in the books of the company for the years 2019 to 2022. Students, what I am going to do is I will do working notes and open the plant and machinery account for each year separately and balance them first before moving to the working notes for the next year. This step-by-step approach, will make it easier for you to follow and understand the process. Okay, shall we start with the working note for year 2019? So this I have named it as working note number 1. So depreciation for machinery 1. This machinery which we have bought on 1st January 2019, I have marked it as M1. 1st January. Okay, the value as I had already told you is 30,000 plus 20,000 into 10%. Amount is 5,000 because we are charging depreciation on straight line method at 10% per annum till 2022. Okay, depreciation for M2. See, we have bought another machinery on 1st July 2019. So that depreciation will be for 6 months from July to December. So 25,000 is the value of that machinery. 25,000 into 10% into 6 by 12. Okay, it comes to 1,250. So total depreciation for 2019 is 5,000 plus 1,250. It is rupees 6,250. Now we are going to open plant and machinery account for 2019. We are opening the plant and machinery account for the year 2019. You all know the format of ledger accounts. On the left side it is DR, on the right side it is CR, and we have the columns of date, particulars, amount, date, particulars, amount. First we have to pass entry for purchasing the second hand plant and machinery. The value is 30,000 and 20,000, which we are going to pass separately. So the first entry will be plant and machinery account debit to bank account. Here plant and machinery account is debited as the value of the asset is going to be increased, and we are crediting bank account because the value of bank, the amount in the bank is going to be reduced. Bank is an asset. When the asset value is reduced, it has to be credited. First, this has to be posted in the ledger. So we are opening plant and machinery account. In the journal, bank account is credited. So in the ledger of plant and machinery account, it will be debited. To bank account on 1st January, we are taking 30,000 rupees. Again, same entry will be passed for 20,000 rupees. Okay. So again, on January 1, to bank account, 20,000. On 1st July 2019, additional machinery cost rupees 25,000 was purchased. So on 1st July, you are going to write again to bank account 25,000 rupees. Okay, first year all purchase is over. So we are going to do the depreciation part. What is depreciation? Depreciation is treated as an expense, right? So when all expenses are debited, so we are going to debit depreciation. Depreciation account debit to plant and machinery is the journal entry. Okay, in the journal we have debited plant and machinery. In the plant and machinery account, depreciation will be credited. So depreciation will be charged at the end of the year on December 31st by depreciation account. This is from working note 1, which we have completed. We calculated that the depreciation amount is 6,250. Again on December 31, on seeing the totals on both the sides, we find out the total of debit side is more. So we take the total 75,000 to both the debit and the credit side. On deducting 6,250 from 75,000, we get 68,750 as the balance as on December 31. By balance carried down 68,750. Now we are going to do the working note number 2. Okay, that is for the year 2020. In 2020, we have not made any purchase. So there is no purchase. Only we have to charge depreciation for this 50,000 rupees and 25,000 rupees. Okay, that is for the whole year because we have purchased all these things in 2019. So depreciation for M1 and M2 for 2020 is 50,000 plus 25,000 into 10%, 7,500. This we will take it to the plant and machinery account for 2020. This is our plant and machinery account as on 2020. We saw previously that in the year 2019 we had a balance carried down on December 31 as 68,750. Now we are bringing it here on January 1, 2020 as 2 balance brought down 68,750. As there is no other transaction, we are going to only pass entry for depreciation. On December 31 by depreciation account, working note 2, 7,500. Okay. So on seeing the debit side total is more, take that to the credit side also. On the credit side, when you deduct 7,500 from 68,750, you get a total of 61,250. That will be by balance carried down as on December 31, 2020. So we are now going to do the working notes for the year 2021, that is working note number 3. In the year 2021, on 1st July 2021, the plant purchased on the 1st January 2019 became obsolete and was sold for 10,000. That is a second hand plant which we purchased for 50,000. No, that became obsolete and we have sold it for 10,000. Now we are going to calculate whether we have earned profit or incurred loss on the sale of machinery, that is M1. Cost of M1 is 50,000 less depreciation charged so far on M1 is 10,000. That is in 2019 we have charged 5,000. Again in 2020 we have charged 5,000. So total comes to 10,000. Okay, you can refer to our working note 1 and 2 if you have doubt. Then we have sold the machinery on 1st July 2021, right? That means that we have used machinery from 1st January to 30th June. So we have to depreciate plant and machinery for that 6 months. So depreciation till 30th June 2021 is 50,000 into 10% into 6 by 12. That comes to 2,500. So on deducting 10,000 and 2,500 from 50,000, we get 37,500 as the book value of M1 as on 30th June 2021. Now, the sale value of that machinery is how much? 10,000. Less sale value of M1 is 10,000. Now, if you see here, obviously, book value is more than the sale value. So, we have incurred loss on the sale of machinery 1, that is M1, rupees 27,500, which will be taken to the credit side of the plant and machinery account. We completed the working notes for the sale of machinery. Okay, that is we found out loss on the sale of the machinery. Next, we have to find out the depreciation for the existing machinery. Existing machinery is this 25,000 which we have bought on 1st July 2019. So, M2, depreciation for M2 for 2021 is 25,000 into 10% is 2,500. That is for the whole year. Okay, now we have purchased another machinery in the year 2021 on 1st July. See here, on that date, new machinery was purchased at a cost of rupees 60,000. So we have to charge depreciation from 1st July to December 31, that is 6 months. We are going to name that machinery as M3, new machinery. Okay, depreciation for M3 bought on 1st July 2021 is 60,000 into 10% into 6 by 12, that is for 6 months, which comes to 3,000. So total depreciation for the existing machinery, that is M2 and M3 for 2021 is 5,500. This becomes our working note 4. So we are going to do plant and machinery account for the year 2021. Okay. So on January 1, we are bringing the balance from 2020 31st December to balance brought down as 61,250. Okay. Now we are buying a new machinery, right? Machinery was purchased at the cost of 60,000. 1st July, when you buy a new machinery, it is 2 bank account new. This we have just seen the journal entry and the posting 60,000. And here we have sold the old machinery for rupees 10,000. The entry for that is opposite entry for the purchase of machinery, that is bank account debit to plant and machinery account. Bank balance is going to be increased. Bank is an asset, so it has to be debited, and plant and machinery value is going to be decreased. It's an asset. When the asset value decreases, it has to be credited. So on 1st July in the ledger we are going to write by bank account sale 10,000 rupees. 10,000 is the sale amount. Next, 1st July by depreciation for 6 months for this the 50,000 machinery which we calculated from working note 3, that is for the machinery sold is 2,500. Okay. Next, loss on sale of machinery, that is also in the working note 3. As I had told you, loss will be taken to the credit side of the plant and machinery account by profit and loss account 27,500. This you can refer to working note 3 for the calculation if you have any doubt. Okay. Now on December 31, depreciation for the existing machinery, that is for M2 and M3 is 5,500, that we are taking from the working note 4. This is for M2 and M3, and all these things are M1, 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 M1. Okay. Now when you see the total of the debit side is more, so you take that total 1,21,250 to the credit side also. When you deduct all the credit amounts from 1,21,250, you get 75,750 as buy balance carried out as on December 31, 2021. We are going to do the working note for the year 2022. That will be working note number 5. In 2022, one interesting thing has happened. That is, the company has changed the method of depreciation to the diminishing balance, that is the WDV method, and the rate has also changed from 10% to 15%. Now, before proceeding further, we need the book value of M2 and M3. Those are the existing machinery with us, right? So, we need to find out the book value of M2 and M3. First, let us find out the book value of M2 as on 1st January 2022. The purchase price of M2 is 25,000. Write it here. Yes, depreciation for 2019 is 1,250, 2020 is 2,500, and 2021 is 2,500. On deducting 1,250, 2,500 and 2,500 from 25,000, you get 18,750 as the book value. Now, we are going to find out depreciation as on 31st December 2022 on 18,750 with a new rate 15%, which comes to 2,813. Okay, so book value of M3 now we are going to find out. As on 1st January 2022 is book value M3 we have purchased for rupees 60,000 and we have charged depreciation for year 2021 for 6 months, right? That comes to 3,000. So the book value of M3 as on 1st January 2022 is 57,000. Depreciation for M3 on 57,000 at 15% per annum is 8,550. So total depreciation for M2 and M3 is these two added together 2,813 and 8,550, 11,363. Let's prepare the plant and machinery account as on 2022. Plant and machinery account as on 2022 for the year. Okay. Now we are bringing the balance from 2021 31st December. The balance is 75,750. We write as 1st January 2022 to balance brought down. Now December 31 by depreciation from working note 5 we have calculated it as 11,363. Debit side total is more, so we take that total to the credit side also. On deducting the credit 11,363 from 75,750, we get a balance of 64,387. That is buy balance carried down as on December 31. Okay, from 2022 onwards, we are going to charge depreciation under the WDV method only. Okay, taking the book value for every year and finding out the depreciation on the book value. Okay, so now we have completed prospective method of depreciation for changing from SLM method, that is straight line method, to WDV method. If you would like to inquire about the online classes which I take or to get more worksheets, you can contact us at acc.wiseacademy@gmail.com.